So I think I might make a series out of this where I just go through my dividend stocks just to share some that you may not know and reinforce my belief in them. And I kind of enjoyed stretching my tiny artistic brain for the animations that you're going to see coming up in this video. So gas me up on that. But today we're going to start off with ADP. I have timestamps in the description if you just want to skip. But without further ado, let's get into it. Automatic Data Processing, or ADP, is one of the largest providers of human capital management solutions in the world. They provide a variety of cloud-based software solutions and services to businesses of different sizes. Those businesses then use those solutions to pay, manage, and retain employees. With more than 770,000 clients, including the likes of Cisco, Dell, Pfizer, and HP, in over 100 countries, there are over 40 million people around the world relying on them for things like performance management, human resource services, payroll services, and retirement services. It's said that in the United States alone, ADP cuts 1 out of every 6 people's checks. ADP organizes its business into 2 different segments. They have the employer services side as well as the professional employer organization side. Let's start off with the employer services side first. This side of the business accounts for most of ADP's revenue, around 70%, whilst also making up around 85% of their earnings. This is the part of the business that outsources technology-enabled human capital management solutions that come into play with the inclusion of payroll services, retirement services, etc. Basically some of the stuff that I mentioned earlier. The other side of the business, the professional employer organization part, simply put, this is where they hire employees directly in a process called co-employment or joint employment. This makes processing tax, insurance, payrolls, etc. much easier. So just to sum up, ADP mainly helps businesses by providing them with software to manage workplace information in a simple format, which will essentially allow them to stress less about managing documents and focusing more on their actual job. Now that we have some understanding of the company, let's take a look at the main risk for me, in my opinion. As mentioned before, there are over 40 million people who make use of ADP. And as this number increases year on year, so does the risk exposure to malicious attacks and leakage of data. ADP has mentioned data security is an integral part of their business, but as we all know, everything is hackable. Companies just need to implement the correct measures to make infiltration more difficult. So as long as they can keep information protected, I don't really see any other major risk to the business right now. ADP's short-term assets is greater than their short-term liabilities. They also have enough assets to cover any long-term liabilities, so very little worries if anything unexpected pops up down the pipeline. Their long-term debt-to-equity ratio had been fluctuating around the 40 and 50 percentile range over the last couple of years, currently sitting at around 37%. With this in mind, they have enough operating cash to cover their debt. ADP has generated free cash flow over the last 10 years, displaying its consistency and will to cover any spending needs. Dating back to 2016, we've seen a yearly increase in gross profits, with 2019 being the largest, with just over 6 billion generated, resulting in a 10.36% increase from 2018. Obviously, I've only covered a few financial stats there, but looking at the ones that I have covered, I think it's fair enough to say that financially, ADP looks like a stable company. ADP has beaten EPS estimations for the last 4 quarters. Pre the main impacts of COVID-19, it was forecasted to grow steadily, but because of the situation that we're in right now, I don't think anyone is expecting it to beat the first quarter results of this year, which was $1.92. Since 2017, return on equity has remained within the 40 to 50 percentile range, which is above the range Warren Buffett likes of his mid-teen numbers. That sounds a bit weird, you know. But according to his ideology, consistent mid-teen returns may signify an economic moat. The average analyst price target sits at $156, the lowest being $132 and the highest being $188. This signals a potential 6% upside from its current price today. With a PE ratio around 25, I think that's a fair enough evaluation, given the average PE of the IT industry that I've seen quoted as 28.5 and also 22.5 on different sites. So I'm just going to average it out and say it's around 25.5. If we have a look at how it fares up with the S&P 500 over the last 5 years, we can see that it has outperformed it quite significantly, which I guess is a rare sight to see. ADP has a reasonable dividend yield of 2.42%. That has seen a dividend growth for over 44 years, making it a dividend aristocrat. This currently results in an annual payout of $3.64 or £2.92 per share. Within the last 5 years, it has grown by 13%, and within the last year alone, it's grown by 15%, which is very nice. Their payout ratio is roughly 58%, but it's set to increase to be in the mid-60s over the next year. To me, I don't really like seeing payout ratios that high, but in this case, it's not that big of an issue given the company's well-balanced financials. So in conclusion, I like the look of this company. It's well established with good financials and has been paying increasing dividends for over 40 years consecutively. With forecast and large potential to deliver growing earnings and dividends in the future, these are some of the reasons why I have ADP in my investment portfolio. And as you've probably heard 1,000 times before, I'm not a financial advisor. This was just a video of me listing a couple of reasons as to why I like ADP, so do your own research before buying. And on that note, I'm going to leave it there, and I'll catch you guys in the next one in a bit.